Bismillahirrahmanirrahim. Assalamu alaikum, students. This is Salareb, your accounting teacher. Today, we are going to discuss about the topic of accounts. What are basically accounts? Before we move on, just recap what we had discussed earlier in our previous lectures. We discussed that the business performed different activities which are known as transactions. After these transactions are performed, the first step of accounting starts to record the transactions in books of prime entry with the help of source documents. After these transactions are recorded in books of prime entry, the second step is to classify these transactions, to classify the similar transactions into accounts. For example, all the transactions related to cash are recorded or posted into cash account. All the transactions related to bank are posted into bank account. All the transactions related to sales are classified as sales account. All the transactions related to purchases are classified as purchases account. All the transactions related to our credit customers. So all the individual credit customer like Mr. A, Mr. B, Mr. C. So the similar transactions of Mr. A are recorded in Mr. A's account. Similar transactions of Mr. B are recorded into Mr. B's account. All the transactions of Mr. C are recorded into Mr. C's account. In the same manner, all the trade payables, that means the credit suppliers accounts. For example, all the transactions of our credit supplier, Mr. X, are recorded or classified into Mr. X's account. The same way, Mr. Y's account, and so on, so on, so on. Then the salaries accounts are made separately. That means to say all the similar transactions related to salary are recorded into salaries account. All the transactions related to rent are recorded into rent account. So likewise, all the similar transactions are recorded, are classified, and we name it as accounts. So from today onwards, you are going to name it as cash accounts, rent accounts, salary accounts, wages accounts, purchases account, carriage outwards account, return inwards accounts, like this, right? Now, these accounts are basically of two types. We actually put them in two types. The first is called personal account. The second is called impersonal account. But in personal accounts, we have two categories. The two categories are basically fall into personal accounts. The first is trade receivables. All the trade receivables accounts, that means to say all the credit customers account to whom we have sold goods on credit, all the credit customers accounts are recorded into personal account. In the same manner, all the credit suppliers to whom from whom we have purchased goods on credit are recorded into personal accounts. So we can call it that personal accounts can be categorized into two: trade receivables accounts and trade payables accounts. In other words, all credit customers accounts and all credit suppliers accounts. The second type is impersonal accounts. Guys, impersonal accounts are further classified into two: real accounts and nominal accounts. In real accounts, we can categorize the accounts which are related to income statement. And as we know, in income statement, we have revenue account and expenses account, because income statement is prepared to calculate profit or loss. And to calculate profit and loss, we need to know about our income and our expenses. So all the revenues and the expenses accounts are basically used or recorded into real account, which are known as impersonal account. So it's written all here: all income statement accounts, income and expenses accounts, and in other words, we can call them temporary accounts. These are the temporary accounts which are to be transferred at the year end into income statement. The second further classification of impersonal account is nominal accounts. Nominal accounts are basically the permanent accounts. They are basically related to statement of financial positions account. All the accounts which are related to statement of financial position are known as nominal accounts, and they are all your assets accounts except trade receivable. All assets except trade receivable. Why? Because trade receivable is already a personal account. So all the assets accounts, all the liabilities accounts except trade payables or the liabilities account and the capital account. So these three accounts, all these three accounts are basically categorized as nominal accounts. So remember guys that accounts are of two types: personal accounts. In personal accounts we can categorize trade receivables and trade payables account. Impersonal accounts are further classified as real accounts and nominal accounts. Real accounts are basically all those accounts which are used in income statement, like income and expenses, and they are temporary accounts. Nominal accounts are those accounts which are used in statement of financial position account. In statement of financial position, they are basically permanent accounts, and they are all your assets except trade receivables, all the liabilities except trade payables, and the capital account. I hope this is clear to you.